Hello, this is Vance. Friday, February 23rd, 2018. And I'm just going to go over a quick recap about today. It was a pretty big day today, considering it's the last day of the week. A couple of reasons for it. I suppose that even though we had a high a couple of weeks ago of $66 in price of oil, there was some talk about the rig count or the production in the U.S. upticking, so might have a depression on the price of oil. But this week is kind of a turnaround, and even though it was a short week, we had a pretty good run up as far as price of oil was concerned. This was 9 o'clock right here at the 9 o'clock open. I wasn't here for that. If you were, you could have really traded right here. It's really two pullbacks, the first pullback, second pullback to this area. So there's room to get out. If you get in right at this level, you would have gotten your first contracts off. So I think that was the first opportunity. Now, shortly thereafter, just after 9 o'clock, prices pulled back down. And you can see price pulled down the first time, hesitated, pulled back the second time. And then it turned around. And this is where I got in. I got in right here. This is my first attempt. I was expecting to get the 15 ticks off. Price spiked up here. I left it. I moved it to break even. When I was plus 10, it came back and it took me out right here. So I was in at 62.72. It took me right out again. So it was a scratch trade. However, when prices moved up here, when it hesitated at this level, I got back in. In fact, I got back in almost immediately after it took me out. It took a little while to work out. In fact, let me just see if I can see it. Not long. I mean, it was very short, with probably in a minute or two. You see, right here it's 938, and right here it's 941 before close. So it's 3 minutes. When price came back and clicked down, now it hesitated. It didn't blow through down here. I would have viewed it a little bit differently had it gone down this low. But I looked at it from the perspective of this price came down, came back up, and then came back down right to here, and I thought maybe I was premature of moving my stop up to break even, particularly with these larger bars. So I got back in at exactly the same price, at 62.72. Took my first contract off on the next bar. It took me out. I moved it to break even from there, and it really didn't look back. Not only did it get that back, it took a while to work out to get to the 30 ticks, which it did. I'm right to here by, let's see what time it was, 10:15. So here my first entry was at 9:31. I got back in, broke even 9:41, and so roughly half hour later when I got my second contract, and then from there it moved its way up, and I got another contract off, but I kind of moved it up. I had it recorded, so you can take a look at it. That's what happened. From then on, it would just kind of move its way higher. Now, if you hadn't gotten on this trade here, and I think there was an opportunity to get in at this level. I mean, you could see this, price pulled back to here. This is really a second entry level. It's not a great setup, but here I think it's worthwhile to get in this area. Now, remember where your target is. If your target is here, okay, this is really just 15 ticks between here, this rotation. And so if you got in on this bar right here, it would have taken you out. It would have came back, broke you out of break even. If you get in on this one, limit in, it went quite a bit higher. So you were okay with that. So that looks like a really good one. This may be a little aggressive, and this was mind you, it wasn't that late in the day. It was only 11:15. Price extends its way up to 63.73, and then pulls back, and then from there on, it just really moves sideways, and that's where we are right now. But looking at here, it was really keying on the open, and that's something to kind of. I find that most of the like a lot of the really dynamic trades are probably going to take place between 9 and 10 o'clock in the morning. The first hour and a half, maybe the first 2 hours of trading, but the first hour to hour and a half is really where most of the moves take place. In fact, if I look at my statistics, most of my gains are made between 9 and 10 o'clock in the morning. So it's really that first hour. But that's not necessarily always the case. You can see that at 11 o'clock, this would have been a pretty decent move up here had you gotten on this trade. So it's not necessarily written in stone. The other thing that I keep an eye on is the fact that the range of the day is going to be between $1.50 to maybe $2 maximum, but usually between $1 and $2. And so, or $1 to $1.50, somewhere in that neighborhood. That's something else to keep in mind. So right from the open, and we're looking at this time at 62.59. If that's where the open was, I mean the New York Open, where the pit open is, when it moves up, here it is at, this is $2 right here, and that's that's $1. 62.61, and this is 63.64. So you can see this is $1 over this period of time, and then when it turned back, if you look at off the low of the day, it's 62.33 to that. You keep in mind between $1 and $1.50 is usually the range. I mean, I'm not saying that's not written in stone, but let's just get a feel for that. If prices extended beyond that, that's why I'm very reluctant to get in a trade after the market has moved 30 cents in one direction or the other, unless, of course, it's on a pullback where I see. Now, why would I get into this trade? Why would I go long here as opposed to short? Well, because it's already tested low. We've had this pretty strong move up, and if I look at it from a measured move standpoint, I'm looking at prices pulled back to this area. I'm looking at a move of probably about this magnitude. That's really what the idea was, even if it did extend before the previous high. So when I looked at this and then getting back in, I'm looking at, well, this is kind of like, this looks to me like there's some support in these areas. Relative support here, and likely here. And even though there's resistance here, you have to say that I have there's an opportunity, there's some to extend to this area right here. That's why this 15 ticks is a little bit higher, and from there, and this looks like to be almost in the middle of this particular range. But it was based on the fact, even though it's more like a middle range trade, I guess you would say, on this tight trading range, it's this move off the bottom that I was really playing off of. That's kind of the idea here. This is more along the lines of if you're getting in this area, you're looking at trading for yesterday's high. You eliminate this, and you still have that room. So that might still be in a consideration when you're trading. Again, I wasn't looking at going short. I didn't see any real short trades here. Not here. I wasn't expecting that, and you can see that when a price went down in this area and bounced right back up, that to me is evidence of not a short trade. That's about it for that. I have some video of it. I don't know if you want to see it. I have some commentary as well, but it would just be a repeat of what I've got. I might stick it up there later. I don't know. I have to edit it because it lasted an hour. I have to cut out a bunch of stuff for that as well. One other thing, last thing, Slowhand Method. This is my email. Slowhandmethod@gmail.com. People are making inquiries, to the wrong email. If you have interest, you have any particular questions about what I've done as the Slowhand Method in general and so forth, send your queries to the slowhandmethod@gmail.com. If you're asking questions about, if you're stuck or you have something that you would like to know, just certainly send me the email. I'll try to answer them as quickly as I can. It's not like I have 20,000 followers. I only have maybe 600-700. So I've got time to answer the emails. Not saying that I'll get them back right away, but I'll do it on a reasonable scale. I haven't been my health hasn't been the greatest over the last few weeks, so that's why I've been kind of slow in publishing and that kind of stuff. But I'm just getting over to a couple of aches and pains that I've been experiencing over the last little while. So I'm feeling like my old self. Therefore, drop me a line. Email at slowhandmethod@gmail.com, and I'll try to get back to you ASAP. So this is Vance. Thanks for watching. Bye for now.